Breaking news from Global Echo Check. China ends all Boeing orders, shifting to Airbus and COMAC. A sudden move by China leaves Boeing in crisis, shaking the global aviation market. Washington calls the decision unfair trade pressure, but Beijing says it's pure business. Boeing faces factory slowdowns and job losses after China's complete order freeze. Meanwhile, Airbus steps in fast, signing new contracts worth billions with China.
And today, the global aviation industry has just been shaken to its core. China has officially terminated all Boeing orders, shutting down existing projects, and shifting its entire future fleet to Airbus and its homegrown aircraft maker, COMAC. This isn't a small policy change. It's a seismic move that could permanently reshape the balance of power in aviation. Let's be clear about what just happened. This isn't a simple supply chain hiccup or a temporary delay. This is a full-scale freeze. China, once projected to buy nearly a quarter of the world's new airplanes in the next 2 decades, has effectively slammed the brakes on every Boeing deal. And in an industry where the order book is the heartbeat of survival, this freeze is nothing short of catastrophic. See, those future orders aren't just numbers on paper. They determine how a company builds, invests, and keeps its global supply chain alive. When those orders stop, the machine stops with them. This isn't only a financial blow, it's a symbolic one. It signals to airlines from Jakarta to Johannesburg that doing business with Boeing might now carry geopolitical risk. Beijing's move didn't just hurt Boeing's bottom line. It attacked its reputation, once seen as the safest, most reliable choice in the skies. And the timing? Brutal? Boeing was already limping. The company's defense division had just been hit by a major strike, halting production on key military programs. Meanwhile, delays piled up for its highly anticipated 777X jet. In short, Boeing was vulnerable, and China struck at the perfect moment. This wasn't random. It was economic warfare by design. Beijing knew that targeting Boeing would ripple across America's industrial backbone. And that's exactly what happened. The U.S. industrial base now looks exposed, its soft spots visible to every rival watching. The spark that ignited this entire chain reaction was Washington's decision to impose tariffs, some as high as 145%, on key Chinese products. On paper, it was meant to protect American jobs. But in reality, it became a boomerang. You can't isolate a global economy without consequences. Those tariffs forced China not to retreat, but to reinvent, to innovate, diversify, and create self-sustaining supply chains. Instead of knocking China down, America's tariff war accelerated China's self-reliance strategy. The result? China began funding and nurturing its own industrial champions, and none shine brighter right now than COMAC. For years, Western analysts mocked COMAC's C919 jet, calling it a copycat project with no real chance against Boeing's 737 or Airbus's A320. But that old narrative is officially dead. With Boeing frozen out, COMAC now has a massive domestic runway, thousands of guaranteed orders from Chinese airlines eager to buy local. That scale means faster production, lower costs, and constant technological improvement. This is how industrial giants are born. China is doing what the U.S. did in the 20th century, using its home market as a launchpad for global dominance. COMAC isn't just making planes, it's building an entire aerospace ecosystem, and America's trade policies just gave it a huge boost. And then there's Airbus, the quiet winner of this geopolitical dogfight. Think of Airbus as the neutral player in a messy divorce. They didn't pick sides. They simply showed up at the right moment. As Chinese airlines dump Boeing, Airbus becomes the ready alternative. It's already signing billion-dollar deals and expanding production partnerships inside China, creating local jobs and goodwill. That's smart strategy. Airbus isn't just selling jets. It's embedding itself in China's economy, ensuring that what happened to Boeing can't happen to them. It's becoming both a partner and a provider, strengthening its global presence while Boeing struggles to breathe. But this story goes even deeper than planes. What we're really witnessing is the BRICS alliance coming alive. China, Russia, India, Brazil, and others forming their own economic ecosystem. They're no longer relying on Western systems for trade, finance, or technology. They're building parallel economies, using their own currencies, their own banks, and soon, their own aviation standards. Imagine an airline in Africa or Southeast Asia buying COMAC jets, not with dollars, but with local currencies, financed by BRICS development banks. That's a closed-loop economy that bypasses the dollar entirely. It's a bold step toward independence from the Western financial system, and it's working. Boeing doesn't just face competition, it faces irrelevance in markets it once dominated. This isn't a short-term challenge. It's a long-term restructuring of global trade itself. America's tariffs were supposed to strengthen its industries. Instead, they've given its competitors the perfect motivation to build alternatives. The real danger isn't the loss of one deal, it's the loss of trust. For decades, U.S. dominance came from being the safe, stable choice in trade and technology. But now, the world has seen that the U.S. system can be weaponized through sanctions and tariffs. The logical response? Build systems where America isn't needed, and that's exactly what's happening. Boeing's crisis is a blueprint for how entire industries could crumble if internal weakness meets external pressure. Think semiconductors, EVs, or pharmaceuticals, all facing the same risk. We're entering an era where there's no single global economy anymore. The world is splitting into two massive economic blocks, the U.S. and allies on one side, BRICS nations on the other. It's not a cold war, it's a cold economy. And every nation, every company, every consumer will feel the effects. The Boeing collapse is not just an aviation story. It's a symbol of shifting power. The dream of a unified, interconnected world is fading. What replaces it is a divided, competitive global order, one where resilience matters more than dominance. And make no mistake, this story isn't about a single company losing contracts. It's about the reshaping of global power, happening not on battlefields but in boardrooms and factory floors. This is global echo, and the echo of this decision will be heard for years to come.